Welcome to the Home Buying Adventure series. Today's topic is financing and the terms of your loan. Hi, this is Mary Petruzzi with Team Petruzzi at RE/MAX at the Crossing. This section of the purchase agreement is pretty straightforward. Your realtor will need a copy of your pre-approval letter so he or she can fill out the terms of your financing according to how your lender approved you for a mortgage. If you are requesting the seller to pay any of your closing costs, which is typical for a government-backed loan like FHA, VA, or Indiana Housing, this is where your realtor will disclose how much money you're asking. Sellers are not really required to pay anything toward your closing costs, but if the amount is reasonable and your offer price is fair, most sellers are willing to help. The amount of closing cost assistance might be lowered in a counteroffer. This item remains negotiable until you and the seller have come to an agreement. Now, 99% of the homes for sale will be eligible for the buyer to either pay cash or obtain a traditional loan. In rare circumstances, the seller will offer purchasing the home by assuming their government-backed loan. To learn more about this option, visit nerdwallet.com/article/mortgages assumable. You'll also agree to the timing to secure your mortgage. Typically, a formal mortgage application should be made within 5 or less days after an accepted offer with the seller. If you have a pre-approval, then it's likely you've already completed the step. Next, there will be a time frame for you to obtain final mortgage approval or the clear to close from the lender. This is to ensure the mortgage process continues to move at a reasonable rate as to not drag out the time to closing. Once a seller has accepted an offer, they change their status from for sale to pending. Because of this, showings from other potential buyers will be few to none. So it's imperative to keep the mortgage process within a time frame that allows your lender to do their due diligence and get a final mortgage approval to the agreed upon closing date. Your offer is contingent upon getting final mortgage approval, because if you can't get a mortgage, you won't be able to buy the home, and then your earnest money will be refunded. Also, the lender will have the home appraised to ensure the home value is equivalent or more than the purchase price. If for some reason the value is less than the sales price, then we try to renegotiate with the sellers to reduce the price to equal the appraised value. If there's only a $1,000 difference, then it's fairly easy to come to an agreement. But if there's $5,000 or more difference, it could take a bit more negotiation. This is another example of a contingency. If the home doesn't appraise and you can't come to a new sales price agreement with the seller, then your earnest money will be refunded. So your offer is contingent upon getting a mortgage, satisfactory approval, and inspections. If you have any questions about the home buying process that I have not covered in this series, please don't hesitate to contact me at mary@teampetruzzi.com and feel free to text or call me at 317-370-5509.